What if I told you one AI company could still have massive growth potential even after becoming one of Wall Street's biggest success stories? Today we're talking about Super Microcomputer, better known as SMCI. Is this company still worth buying? What exactly does it do? Why are investors paying so much attention to it? And, most importantly, can it help long-term investors build wealth? Stay until the end because we'll cover the company's business, growth opportunities, risks, and whether SMCI could be a smart investment for your portfolio. Let's get started. First, let's understand what Super Microcomputer actually does. Super Microcomputer is an American technology company founded in 1993 and headquartered in California. The company designs and manufactures high-performance servers, storage systems, AI computing platforms, and data center solutions. Unlike companies that manufacture AI chips, Supermicro builds the complete server systems that businesses use to run those powerful chips. Think of it this way. If NVIDIA makes the engine, Supermicro builds the entire sports car around that engine. Their customers include cloud service providers, artificial intelligence companies, government organizations, large enterprises, research institutions, telecommunication companies. As AI adoption grows worldwide, demand for powerful servers continues increasing. That puts Supermicro in an interesting position. Why investors like SMCI? Now let's discuss why investors became so excited about this stock. Reason number 1. Artificial intelligence. Every AI model requires enormous computing power. Companies need thousands of high-performance servers to train and run AI models. Supermicro specializes in building those systems. Reason number 2. Fast product launches. The company is known for bringing new server designs to market quickly whenever new processors become available. Reason number 3. Energy efficiency. Modern data centers want to reduce electricity costs. Supermicro develops energy-efficient cooling systems and server designs that can lower operating costs. Reason number 4. Global expansion. The company continues expanding manufacturing capacity to serve customers around the world. Reason number 5. Strong demand from enterprise customers. Businesses continue investing in AI infrastructure, cloud computing, cybersecurity, and digital transformation. These long-term trends support continued demand for advanced servers. Why someone might invest. So, why do many investors consider buying SMCI? Here are several reasons. First, exposure to the AI revolution. Rather than betting only on chip manufacturers, investors gain exposure to the infrastructure supporting AI. Second, growing industry. Global demand for AI computing and cloud infrastructure continues expanding. Third, innovation. Supermicro frequently introduces new server technologies supporting the latest processors. Fourth, potential revenue growth. If AI spending continues increasing over the next decade, companies supplying essential infrastructure may benefit. Fifth, long-term opportunity. Many investors believe AI infrastructure remains in its early stages. If that view proves correct, companies building servers could continue seeing strong demand. However, remember that investing always involves uncertainty. Strong growth expectations can already be reflected in a stock's price. Why someone might invest. So, why do many investors consider buying SMCI? Here are several reasons. First, exposure to the AI revolution. Rather than betting only on chip manufacturers, investors gain exposure to the infrastructure supporting AI. Second, growing industry. Global demand for AI computing and cloud infrastructure continues expanding. Third, innovation. Supermicro frequently introduces new server technologies supporting the latest processors. Fourth, Potential revenue growth. If AI spending continues increasing over the next decade, companies supplying essential infrastructure may benefit. Fifth, long-term opportunity. Many investors believe AI infrastructure remains in its early stages. If that view proves correct, companies building servers could continue seeing strong demand. However, remember that investing always involves uncertainty. Strong growth expectations can already be reflected in a stock's price. Risks you should know. No investment is perfect. Here are several important risks. Competition. The technology hardware industry is highly competitive. Major companies compete for enterprise customers. AI spending could slow. If businesses reduce technology budgets, server demand may weaken. Supply chain challenges. Hardware manufacturers depend on components from multiple suppliers. Market volatility. Technology stocks often experience significant price swings. Valuation risk. If investors expect extremely high future growth, disappointing results could lead to sharp declines. That's why diversification is important. Never invest based only on excitement or headlines. Final thoughts. So, is SMCI worth investing in? For investors who believe artificial intelligence will continue transforming industries over the next decade, Super Microcomputer represents an interesting company because it provides critical infrastructure behind AI computing. The company operates in a fast-growing market, serves enterprise customers worldwide, and continues expanding its technology offerings. However, the stock can also be volatile, and future returns depend on continued business execution, industry demand, competition, and overall market conditions. As always, research the company's financial reports, understand your own risk tolerance, and consider building a diversified portfolio rather than relying on a single stock. If you enjoyed this analysis, don't forget to like, subscribe, and turn on notifications for more stock market, AI, and investing videos. Thanks for watching, and I'll see you in the next video. This video is for educational purposes only and should not be considered financial or investment advice. Always conduct your own research or consult a qualified financial advisor before making investment decisions.